So we are almost at New York Open, but I like to start checking the price before the micro. So we have 2 more minutes for the micro before New York opens from 7:50 until 8:10. I cannot emphasize how much important that you need to take your trades in these time frames, because first it's gonna restrict you from being all over the place and trading all of the time when you're looking at the charts. And second, as ICT mentioned, it's a really nice time frame for the price to deliver. So you won't have to experience as much consolidation. And if you have a nice bias, or you're using any PD array, it might deliver better. Let's put it that way. So we are almost at the cosmetic crossment of this opening gap. So I tend to leave these day opening gaps and week opening gaps for at least 5 days for the new day opening gap, and for the weeks I'll leave it also for 5 weeks. They really help with your bias and help with your entries. It's like another indicator for you to go long or short. Like for example here, let's see price touches it again, okay? And I see there an SMT for example here, and I see another order block with a fair value gap. I'm going long and targeting the this constant encroachment. So it's a nice thing to look for. So now we have basically most of London was bullish. So of course now I will prefer to go bearish with uh, with New York, but of course we gonna scalp, so it doesn't matter the daily bias as much. So for now I will be looking for, so now we have an SMT here. We don't have an SMT. So yeah, if we have a break under this level, I might consider shorting. It depends on the displacement and the PG array I'm gonna use, because this would be a breaker, and my favorite one by far is the breaker, because for the breaker to exist you need to have a stop hunt before, because we have high low higher high, right? And then the price is gonna break, and you're gonna have a break of market structure with a stop hunt. And it would be ideal if in this level we see displacement and it overlaps with the fair value gap. That's a unicorn. That would be my ideal setup to look for. So nothing interesting really happening right now. But I will definitely be taking trades today. I usually will be satisfied with 2 or 3. So on average, I will say, yeah, I'm taking 3. I'm winning 2 and I lose 1. And if I win 2 straight, I'm done for the day for sure. But I trade every day, because I trade the 1 minute, and you just you're able to see setups. If you're trading London and New York, you're able to see setups and valid setups, not just I will enter no matter what. And sometimes I might use also the 5 minute and 15, mostly for bias. I use them mostly for bias. So I have them on the side here. I have the 5 and 15. So not a lot of movement there. We still have some time in the micro. We're just starting. So if this gets taken and then we see bullish move, I'm definitely going until here, because then we're gonna have an SMT and we're gonna have a confluence or an indication, a valid one, to go long. But for now, I don't want to go long because there is no there is no stop hunt. There is no SMT lower. I have no reason, and the price was already bullish the entire morning, right? So there is no reason for it to go for me to go long right now. But I think I've seen a fair value gap in the 15 minutes. Yes, this one. So watch out there. So here you have a constant encroachment of a new day opening gap, and you have a 15-minute fair value gap. So you really don't want to go above this level. Yeah, I will mark that line. And we're still very far away from the midpoint to go to a premium, for example. We're still far. I'm expecting to hit that and then it's gonna go short. Yeah, this is just bad price action, which makes sense because in London it really went, it delivered. So we have the high taken in both ends. Again, we still have so many more micros. We still have the 9:30 opening bell. So you don't have to rush. You really don't have to rush. And especially we have news today. So, and also before the news, the price tend to be bad. The first 30 minutes before the news, even after the news, you need to wait a little bit. Wait that 5 10 minutes. ICT always say 15, but definitely I will be trading the after the news. Then you can see better price action. You'd be more confident with your trades. So let's draw the micro time where we have to enter. It's from 7:50 until 8:10. So this is the window to look for setup in. It really restricts you. It just restricts you to follow your rules, to to be to be precise with your entries, because we can enter in any time. Even this after the kill zone, like you can see an order block, you can use it. Yeah, you may have been stepped out here, but you can use a fair value gap. You can, so you need to be strict. You can't be all over the place all of the time. You will wreck yourself. And it's not even about losing trades, it's just about losing your mind. It's too much. It's too much to handle. And you might even have one, two, even a week of winning trades, winning days even. But that day when you're gonna face, when you're off, when something happen and you lose the first and then you're gonna lose the second, you're just gonna wreck yourself after that. That's what's gonna happen. Because you'll be so confident and you'll be trading everything and you won't wait for another hour to pass for you to chill. You just be long and short immediately. So sticking to the micros is really the best solution, and it is actually, even ICT always recommend trading in this micro. And trust me, you're gonna see many setups in it. So it's 8 a.m. exactly. So this is New York Open. I don't really trade the 8:30 and midnight price. I see many people doing that, but I don't, because I know what I'm looking for. Um, I don't specifically need for the 8:30 swing to be broken for me to be swept for me to enter. I will enter regardless if my setup is there at the time that I'm looking for. But I can see the point or understand why people do it, but I just don't. I like the freedom. I like using the PD arrays that I learned, because ICT gave so many indicators, so you can, yeah, go crazy. He gave you all that, and it's up to you to choose what you want to trade and what you don't want to trade. Even the one I use, breaker, order block, fair value gap, balance price range. Even for some, that can be a lot, but that's why you have to restrict yourself with the time, and you really need to emphasize the PD array you actually want to use. Which one you feel the most comfortable with? Would you enter in any fair value gap? this is the micro. Here it touched the fair value gap. Would you enter here? For example, why I didn't here, because my target would have been this red line, the constant encroachment, right? Too much, very small TP, not really worth it. And for example, if I had an order block here with it, like an order block here, for example, three down close candles with the fair value gap, yeah, I might, but I would like to trade the breakers. I love breakers. So if this, for example, so if this leg, for example, took this swing and then it rallied like this. So for example, we would be having, yeah, it would be like this candle. So we'll have this high and low, it will break this and then it will rally. These candle will be a breaker. The swing high that's between the candle that's between the two swing highs. So this is the candle and it's between two swings. It's in the middle. That's the breaker. If that of course happened, but it didn't, and that will overlap with a fair value gap, that would be interesting. And of course, what makes an order block valid or a breaker valid is the fact that it have an imbalance with it. It has to have a fair value gap, an efficiency, something. So here we see how it touched the red line. Oh, almost to the tick, I think. It is pretty impressive. And now it's delivering. So now now the only reason if I go short, if this creates a balanced price range, I can go short here. If this stays intact, if this, I can go short and target these lows. But I need to see a nice displacement there. Yes, I like this, I like this. Yeah, my stop loss will be here. This is too much of a stop loss, too much, too much. So this is the first imbalance. I can put it here in the first imbalance, and I will target this. So there I have an imbalance and I have a balanced price range in the first fair value gap, this one here. This is a balanced price range. Also, this candle can play an order block. This down close candle, the black one. Okay, let me put this here now. Because there is a fair value gap. We still have 2 minutes in the micro. Yeah, if it takes this low, I'll take my entry out. But you want to see those displacements, especially if it hit. Why I'm very confident and I changed my limit order there because it touched an area of interest of mine. It touched that cosmetic crossman that I was looking for, and it created this balanced price range also, which I like, and a fair value gap and a nice displacement out of micro. That's a good recipe for an entry. Plus, uh, we have we've been bullish all London, so New York will want to cover all these inefficiency that London left. So it is nice. So probably I will even change my limit order if this becomes a breaker. If I see if the price closes below this, I will even go there. It would be like this. No, still. I needed to close below this. I need to close below this, and I will be targeting here, and I will change my stop loss above this order, bearish order block. So let's see if initially first it will touch my limit order or no. Honestly, for now, it will be a red flag if it does, because it will violate this order block, right? I'm kinda tempted to put my entry here, but we're outside of the micro. It's 8:10 now. Let me see if I have an SMT here. I don't, so yeah, I can let it. We still don't have an SMT. This still did not been taken. Come on, fill me in. Okay, I'm in. So I have 16 points stop loss, and I have almost 19. So now it's touching this order block, this down close candle. Ideally, I don't want it to close below the mid. I don't want it to close above that midpoint of this fair value gap. But we're outside of the micro. Yeah, definitely you don't like seeing that. But we still have a long day to trade, so don't let losing trade yeah, make you lose your confidence. Or the only thing that I didn't like here that I entered at after the micro. After the micro was done, then I entered. 1 minute later, yeah. So how many points here? So yeah, we have 16.17 almost. So let's mark that. Yeah, the worst thing if it steps me out and then goes lower. I really would rather now to see it run. Yeah, now be back after the news. 8:45 is good. So we have the news now. It's not really that big. So let's see if we have an SMT here. I would say nothing really pretty interesting here. There is nothing to look for here. Nothing. I don't want to even go short at this point. Even if it breaks below this, I want to find a nice SMT setup. Because we don't here have an SMT, right? Probably a small one, but that won't. It took these lows here. You'd wanna put this here. I don't know, I don't wanna go short right now. It took all this liquidity right now. You have here a breaker with a volume imbalance. Like here, if you go right here. But my target already took all these lows. No, I wouldn't recommend this, no. Because we already have an SMT, you see. We already have an SMT here. I would want to see the price go long and later on in the day in New York will go short. Yeah, look, yeah, absolutely not. So we have an inversion, volume imbalance here. Let's see how the price is gonna react on this fair value gap. Of course, I don't want to enter now. I'm not in the micro. So here is just price after new, just manipulation. Okay, it used this line and this volume imbalance. Okay, now it's respecting this order block, this breaker. Stick to your rules. Only enter when in the micro, even you're watching and even it can deliver to where it won't. But trust me, if it doesn't, enter the trade, that just feels good. That just feels good. This just so like this. So you'd be happy to see that you didn't shorten here, and the price just would have took your limit order out right now, but you decided not to enter. Especially if the price is like this, it's very unclear and we're not in our micro. So you don't wanna. Every ounce of my body is telling me to short right now. But no. What I learned is if you find like how you gonna differentiate between high resistancy uh, price movement and low resistancy. So every time that you see price like this, what it means is it does not create inefficiencies. When the price moves and does you don't see clear volume imbalances, that's a high resistancy liquidity. You don't want to enter that. You want to see gaps when price move, and then yeah, you can enter. Then you can know that the price is not most likely not gonna consolidate, not do this seek and destroy. Plus these lows were taken, and it's kinda in ES still. So we have kind of an SMT here long, but I need to wait a little bit more. Only in the micro and only when you see a nice setup. So now it's bouncing on that bullish order block. This down close candle is a bullish order block. It's just bad. It's just bad. Just wait, man. Do not enter here no matter what. At least for 10 more minutes. At least during the micro. And we'll see then. But this is just bad. I'm really glad that I didn't go here. I hope no one else did. You see here we have an SMT here. That's why most likely this price went down. This specific candle, it took this swing, but here it didn't. And now it's going lower. I'm telling you, man, if you have a little bit of bias, like 5 minute bias or even 1 minute bias, and you wait for an SMT and you include it with an order block, especially if an order block with another PD array. Like for example, in this case, if this creates another fair value gap and you have uh, this order block here, this is already a breaker. Yeah, it's a swing between, it's the swing low between these two candles. So basically here, let me see a short here, how much is gonna cost. $46, yeah, It's also fine to enter a few minutes before, so let's target that low. So I will be going short. Let me wait for the 47 minute at least. So why I'm entering there? Because of the fair value gap, because of the above SMT. So it touched the order. So I'm in. I'm looking for 12 points. So there it touched the order block. I'm telling you, the micro 850. I may went a little bit earlier. Okay, let me then change the stop loss a little bit here. So I'm fine with. Let me wait for that one to close. At least give me. No, I don't like that wick. No, now the wick respected. Okay, I will change the stop loss. It's fine. So at least now, yeah, 12 point stop loss. It's not bad. We have also 12 point for TP. I know it's 101. I can't target for more, but I'm gonna have then to change the stop loss. I will do that in okay, now we have an SMT. So ES took the low there. NQ, okay. TP hit profit. So it's not bad. I could have, so this is, we just hit 12 point, but I could have targeted this order block, but it's the first trade. I wanted to be a little bit safe, and look at where the price almost hit my stop loss. So it was here. I changed it here. So it's for 12 points. Not bad. So we will, I can keep still looking. We're still in the micro. So let's see what the price is gonna give us. I wanna wait for that 5 minute candle to close below this one, this order block. If that's the case, I can go once again short with a lower stop loss. Also, we are in a 15-minute fair value gap. So that's a tricky one. Yeah, you see, sometimes I heard it before, a little bit of profit is better than a loss. Like really. And when you start hitting these small wins, and it's not small, 12 points, that's like $200 a day. Even it's like $230 a day. Let's say 200. If you consistently pull up 200 from the market every single day, that's really nice model. And of course, we're still trading, so we will see this micro or the one after. But you have, so don't, when you trade the 1 minute, you cannot just look at the 1 minute. You need to look at the 5 and 15. I use this indicator so not to just bounce back again from the 5 and 15. It's just next to me, like this. How we saw this fair value gap. Okay, the 5 minute candle closed below this order block. I want to see the 15-minute create an inversion here. I want to see this in the 15-minute become an inversion. So it touched this order block. Now it's going lower. So let's see the midpoint here. Yeah, I think I should have targeted that. This is a nice level. This is absolutely a nice level. We have a breaker here. We have a breaker with a fair value gap. 15-minute fair value gap. This will be a nice level. So now I won't be looking for long until it touches here. So let's see about the shorts. Yeah, I should have targeted here. How many points would have we did? So my entry was here. Damn, yeah, almost 30 points. Yeah, 30 points would definitely be it for the day. If it closed below this one candle, I would have one short. I mean, with a smaller stop loss like here, and I would have. Oh, it's very low. Very, very low. No, I wouldn't. But it's amazing how, yeah, we were able to trade in the 1 minute like this, like 1 minute volume imbalance, 1 minute order block. Sometimes, yeah, like you see yourself 1 year ago, you didn't even understand what ICT that he was even trading. I don't know what was that. Like I was expecting an introduction to Forex or what is trading, and the dude started blobbling about, yeah, institution theory, or I don't know what was he talking about. CB, busy, balance, inefficiency. Yeah, and look at you now. Yeah, trading 1 minute volume imbalance, checking 1 minute candles, having a bias, entering, executing, passing challenges, prop firms. But we definitely gonna need some patience here. Yeah, you need patience here. So yeah, let's mark that. We have one. So here, look, I put my stop loss exactly here and stop me out because I saw this volume imbalance, but the wick, the fucking wick, they always do the damage. The wick do the damage and the body tells the story. It stepped me out, but it's fine. So we have one losing trade, one winning trade. See this wick here. So if you use this order block, you would have been stepped out. Okay, we touched the midpoint. It is really a nice level now to go long. So that's what I'll be looking for now. I will look for long, even if our daily bias is short. We have we have such a nice liquidity here. It's gonna take them before it goes lower. If if it does. So even here, even it create an inversion here, I won't go immediately. I'm big advocate of the SMT to reverse. But I understand we're in the very nice level. We're already in a discount. We touched the midpoint, higher time frame breaker. I understand that, but it's gonna require a bit. I need couple more confluences for me to go long here. Let's see. Okay, this is an. I hope it creates. No, don't go lower. Don't go. Yeah, no. I was thinking a balanced price range. Okay, now I may go long. I'm being a little bit perfect here, putting the order on that order block, but ideally, of course, will be here. Let me see the next candle. This would be a big stop loss I cannot afford. I cannot afford this stop loss. Yeah, the price just ran away. But it makes sense, right? I told you because we already were in a very interesting level. We already reached the midpoint, the equilibrium, we reached the discount, and then we were already in a higher time frame breaker. Let's see that again. It was really a nice entry. Yeah, this is the breaker. Even in the 5 minute, I think it's more clear. Yes, so already touched here, and I was waiting, but then this candle manipulated me. I was gonna enter if this candle did not close like this, but it did, unfortunately. So here I will be stepping out of the trade because we're outside of the macro and we took too many highs. So now I'm gonna wait for the 9:30. I will be back. This one can actually be an interesting one. Let me see the stop loss here. Yeah. Let me see if it creates a fair value gap. Because here we have a fair value gap overlapping with a breaker and with an order block. And the plus, I'm very bullish because we didn't have any SMT. We have an SMT lower but not higher. Yeah, I will definitely target that high, but I will be out of the trade if I'm before 9:30. If I'm not in before 9:30, absolutely I will be off. But this is a nice one because we have a small stop loss and we have a higher TP. So this is almost 1 to 2 and the one being 12 point. And we already explained how we're very bullish right now after it went to discount in a higher time frame and then touches a breaker in a higher time frame, and now it's rallying up to take these highs, these equal highs. So let's see. I always tend to put my entry in the beginning of the fair value gap. I don't never put it in the. You can put it in the middle, but never in the lower, because then it's gonna be a very unlikely scenario if it already closed below this fair value gap. It's no good for anyone. I want this this candle to close above this order block. That would be very efficient. This is what you always want. I'm telling you, a stop hunt, a bias, the right time. Let me take that back. You need to trade in the right time first. Time and then price. You need to focus on the time that you're entering, see a stop hunt, and then you're gonna ride the rally. That's how it happens. And always don't put the big stop losses. Oh, I didn't see this volume imbalance here. I would want the 15-minute candle to close at least above this volume imbalance, at least. But the 9:30, as we all know, it's very unexpected. So I will try to change my entry to break even a minute before. So I always tend to put a little bit below the actual liquidity because sometimes it creates equal lows. So I just want to avoid the spread also. So this is, so I have 22 points. So almost $500, 450. So let's see. But I won't be waiting exactly the 9:30 minute. Even if it's a little bit less, I will take. Let me change first my stop loss. So why did I change it here? Because we have this candle. This candle, it closed above the bullish order block. So even if we go down now and this gets violated, the trade is off anyway. So I will allow it to come back to touch the beginning of this order block. But just to be safe, I'm a bit, let me put it here. That's just like how many? This is like 4 points stop loss, so it won't really hurt. So I will tolerate that, but I don't like if the 9:30, waiting for the 9:30 exactly. Come on, touch it, baby. Yes. Yes, so that's almost 22 points. 22 points. So I entered exactly here and I targeted here. 22 points. So we have 2 winning trades in a row now. So again, we can recap. So here I entered in the short here. So first, we lost the first one here in the morning, and I lost it by this wick. I put my stop loss here, waiting for that volume imbalance, and it just stepped me out with the wick. Wick always do the damage, the body tells the story, and then it went short. Here I waited after the news. I wait for almost the micro time. I entered 2 minutes before the micro. I endorsed a little bit of stress here and it went short because I entered here because of this SMT. So here there was an SMT and I had a bearish bias because I wanted to touch the midpoint of this leg, of the entire leg, to go to discount and then it will rally up, and that's what happened. However, I didn't held because I lost the first trade, so I don't want to risk it. We won this one. I got, I think, 12 point here, and after here it touched the it went deep to discount, it went to discount, a higher time frame breaker, and then it rallied up. I entered here again. Why I didn't wait for a displacement, for example, for a retracement here? Because this candle created an SMT with ES. So we're in the 9:30 already. Yeah, you see, I would have never waited for the 9:30. So, yeah, this candle exactly created an SMT and it created a fair value gap. So here I have a breaker, a smaller breaker overlapping with a fair value gap. It's the dream. And then I went long, targeting these equal highs, and that was 22 points. So I took like 1 to 2 ROR, almost 1 to 8. So we're profitable now. So I will be let's check, of course. So as ICT says, the regular trading hours, you need to see the opening range gap. So let's see where the 9:30 tends to go right now. Okay, where's the gap? So yes, we have a lower gap now. This is yesterday closing price, and this is today's opening. So today's opening was here. So now, yeah, so we'd want this gap to be closed in the first 30 minutes before 10 at the 9:30. So we will be looking for a short in the first 30 minutes. But let's see. Definitely took these highs. So here we remember there is a 15-minute fair value gap. So let's see if we have an SMT. I always move with the SMT. It's the best indicator for me. Of course, not by itself. It has to come with a little bit of bias, not a daily bias. And one or two PD arrays will do the job. So I don't see a significant SMT. So yeah, we're gonna have to wait here. Yeah, the 9:30 is just crazy. So that's bearish order block. Here it would be very short stop loss, like if you use this order block and you'll target these lows. But of course I wouldn't recommend it because so now we have an SMT now. Let's see. Ideally you would want to wait for the 950 for the micro time. Bad pricing. Don't attempt anything right now. You still have the day. We still have too many more micros. Don't enter here. Don't have any fear of missing out. I think the 930 created a little bit of SMT here, but you really don't know how to go bullish after this one. And as I said, as long as we don't have imbalances, as long as we don't have inefficiencies in the price range, so it's just a high resistant liquidity, really avoid it. So yeah, I will definitely come back at the 950 then. Okay, that's a nice displacement. That's a very nice displacement. If it takes this low, I'm not interested anymore to go short. This is a nice order block, but the stop loss is too big. It's just too big. Yeah, no. It took that low. I mean, this still also can be a breaker later on. Yeah, this definitely can be a breaker. What a move. But before, when I first started, I used to immediately put my limit order here, and hey, that's a breaker, and I will target. But sometimes, or most likely, even if it respected this breaker, the wick is gonna destroy me. That's my problem. That was with New York. So now I will wait for another confluence inside of this breaker in the 1 minute. I will even enter in another order block, a bearish order block here. But I will not just put my limit order here and just target whatever. Because the stop loss here is also, the stop loss is big here. Look, 31 points. That's $600. No, I just can't trust it. Just to throw it that like that. At least a little bit there, yes. I have a fair value gap now here. A little bit better. But I don't want to enter right now. So this is the first fair value gap, right? Probably here would make more sense. But 34 point, that's a lot also. That's really a lot. So why I moved here? Because the first fair value gap is very important after the 930. It is pretty nice level to use, and it's kind of overlapping with the breaker. But in the 5 minute, you see I don't have a breaker, I just have a sweep. You see the 5 minute candle did not close below. So it's why a little bit of contingency I have there. Yeah, 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 I'm thankful. I told you I used to do this mistake a lot before, but now never. And plus, we're not in the micro, right? Always avoid trading outside of the micro. You avoid yourself so many losing trades, so many stress, so many unnecessary trades as well. Yeah, I will trade the 950. Just a few more minutes. The 930 is always like this. You see, even this fair value gap, it closed above it, which can make it if an inversion fair value gap, but then no, it just went down. Again, I will be waiting for the 950. And I will definitely be waiting for my SMT. The SMT is the most crucial for me. And you really have to try it for you to understand where I'm coming from. Any strategy that you have, take a look at ES when you do it. Just take a look and see your winning percentage going up when there is an SMT. I think most of us like to reverse. So here we have an SMT, no? I don't like, it took this. If this becomes an inversion and I see another fair value gap with that candle, I'll go long. Let's see. Plus we have a bigger inversion anyway with NQ took this low and ES didn't. So let's see how it is gonna play. But because the price moves a lot in New York, so yeah, you may have a big TP, right? But also the stop loss can be very large. So this becomes an inversion. I hope this goes up now. It will come back later on. I can put here. And I will even target, yeah, this high. No. Inversion. Okay, 19 point, it's pretty good. Yes, I can go long here. The stop loss is very slim and I have an SMT, right? Yeah, I do, but I think it's just run away right now. Okay, this is the midpoint. I can put it in the midpoint of the inversion once more. Did it take? It took that high. Yeah, it went up. Yeah, I'm not interested now in going long there. I have an inversion. I don't like the SMT. It did not take this. But also I have an inversion and a fair value gap. And we're almost at the micro. It's played around a lot below. Yeah, I'm not comfortable there. No, I'm not entering here. Yeah. So as I said, this is an inversion. And we have I just didn't like the SMT here, and I didn't like that I only have the fair value gap to enter on. I would want an order block at least with it. And again, I didn't like the SMT, and the price is just bad. Look, it's not respecting any. Okay, now yeah, I'm happy I didn't go. Really, because it closed below the consummate encroachment of this fair value gap, inversion fair value gap. You don't want to see that. Don't enter only in a fair value gap. That's my personal advice. A fair value gap by itself is just not sufficient. It's just not enough. It's just not enough. Okay, I have an SMT there. If this becomes a bullish order block and next candle close above it, I can go. So if I went, I would have stopped out here. Okay, so with this skin, let's see. Yeah, I'm thankful I didn't go. But I'm looking for one more entry. I'm looking for, so I have here 22 points and I have 12, so that's 34. However, I lost how many points here? Yeah, I lost 15. So I'm like 15 points winning. I would need one more. I would need one more entry. And we still have the day. We still have too many more micros. We just started this micro of the 930 of the 950. If this candle closed above this bullish order block, I'm going, yeah, if this body closed above this, I'm going bullish. And I'm going bullish because of the SMT that we clearly see, and because the order block, and because the next candle, the body tells the story, right? It closed above the wick. And my stop loss here will be permittable. It wouldn't be that crazy. I can put it either, 31 is a lot. I can put it, yeah, I just want to touch. So I can put it even at 20, and I'm targeting this high. That will be an ideal scenario. Let's see more. Even though you have so many opportunities to enter in New York and the price really moves compared to London, London is nothing compared to New York. However, you're gonna have days like this where you don't know what is going on. You don't know how to enter, where to enter. It's just high resistance liquidity. It's just bad. It's just consolidation, and then it will run, and then it would consolidate again, and then it will take the low, and then the high, and then the low. Just seek and destroy. But once you get that nice setup, yeah, you're done. Even the entire day, one trade, one winning trade in New York can really be sufficient. You can easily catch 25 point, easily, if of course your setup is there and the price is clear. But this is not clear. This is everything but clear. Okay. We have some liquidity. So this is a 5-minute order block. Can we use it? The stop loss is so big. Stop loss is very big. But I don't think it's gonna reverse and go long now. I really don't think so. If I can put it here, how much? 30 point. Even 30 point. Okay, we have a fair value gap here. It touched that order block. Okay, it's permissible, I think, here. No, I'd like to see an SMT. I'd like to see an SMT. I'd like to see an SMT to continue short. But I like this. I like this. Because we have a big 5-minute order block here and the candle closed below. And we still have so many liquidities here. Yeah, okay, this is nice. It respected this fair value gap, you see? It respected this small fair value gap. The wick damage, yes. I don't have any SMT to enter short here. I need one more confluence, one more. It's too abstract. It's the order block is just like thrown somewhere. And I don't trust the wicks. See here, it respected the fair value gap. You see, I would experience a lot of pain there. Okay, if this closes below, I'm gonna use this bearish order block. If this candle closes below this candle, because I also kind of have an SMT here, this candle took this candle. I use that as an SMT because it's because your bias is more stronger than that, right? It's you're counting on your bias mostly, and the other thing, there's just a bunch of other confluences. So now, of course, I'm gonna wait. I need that candle to close below the bearish order block, the up close candle. Okay, now we're talking. No, still. No, it didn't. It didn't. I'm not going there. I think it's barely. Did it barely close below? It barely closed below, yes, but still very tricky for me. Still very tricky. But I'm confident it's going short. $25 point, still a lot. If only this candle closed a little bit below, I would have entered. It closed below, but just so little. Okay, thankfully I didn't there. You need every candle, the candle body tells a story. You need to be patient. And this is very bad. This is very bad pricing. I'm not interested now. I don't see nothing there. Yes, I have a little bit of buys to go short, but I really would rather to wait for the next micro. Don't rush. I'm telling you, the regret you're gonna feel. Look at these candles. It's just seek and destroy. It's just like torture. Anybody that's in a trade right now, even if it's winning, which I doubt, it's just torture. Have a clear setup. The day is still long. We still have a PM session. Yeah, it went short. But it would have stepped me out here. It would have. I could have kept it until here, but that was a lot of. Too big of a stop loss. Really too big. Okay, it took this. Yeah. Yeah. Yeah, the bias was right. Yeah, but it would have spat me out. Even this 5 minute order block, I could have used it, but it's just too big of a stop loss. Too big. I cannot afford that. Because even when you're absolutely sure of your bias, you need to have, you need to accept the loss before entering a trade. And I, no, and I wasn't. Do you think it would be enough here that it only took this? Or it can go more short? We have more liquidity. Yeah, a bunch more liquidity. We have these equal lows here. Just step back and look at this price. Just look at this price. Who's in his right mind will enter here? Even if you entered and you took an L, just stop. We're gonna have more setups. I'm gonna enter again. We still have the entire day. We have one more micro later on. I'm watching the price now because we're still in the micro. I will be back, yeah, in 10:50. Yeah, I will be back at 10:50 because this is bad. It's not respecting anything. No gaps, no inefficiencies. This is the definition of high resistance liquidity. So we have two wins, one loss, plus 20 points in total. Be back at next micro. 10:50. Okay, it took all this liquidity. Let's hope in an hour the price will get better and we can find another setup. We still have the AM session, we still have the PM session. We're gonna make another trade today. I'll be back. So we're almost uh, in the new micro. So let's see what happened. Let me change this. Okay, so the price retraced until this gap, and then it went lower. Let's see what did it take. Okay, it went back to this inefficiency. So this is an order block, right? Yes, but I'd like it. Was there a big difference between it and with ES? Let's see what ES did. So they're both basically at the same level. Oh, so this is an SMT between both of them. You see how important the SMT? Look at this rally. This is a 15-minute SMT. That's how you know price is going up. So yes. So we retraced back. It's very unlikely for the price now to go back, to go bullish, because it already violated so many order blocks, inefficiencies. I mean, it went back, yes, here. That's why I try to avoid long-term bias. Like daily bias, it's very hard to figure. A 5 minute or a 1 minute, you can see. Like here, you have an order block, it's respecting it. You go down to one time frame lower, you see an SMT. This becomes an inversion, you go short. This is scalping is really the goal. Even for long now, I don't have an SMT here, so I won't. Even for short also, no SMT. So I'm neutral now. I'm neutral. Let's see what can happen. Okay, so the body are respecting this fair value gap, order block. If this took this low, would have a breaker, I would went long here, but it didn't. My favorite PD array is the breaker by far. So we're playing on top of these new day opening gaps and all of that. So this is the open of 19, this is the open of 10 and 9, this is 18, 5 and 6. Let me remove this. Yes. It's 2 weeks old. It's too much. This is the equal lows. So shorten is still intriguing, because these equal lows, when you have gaps like this, close to it, it acts like a magnet. It acts like a magnet. If I have an SMT here, if this gets taken and ES doesn't, and then I see even an inversion fair value gap bearish or a order block bearish, I would go. Okay, stop. I don't want ES to take it if I'm planning to go bearish, but it did. A lot of people will also use this now to go long, and it's not a bad idea, especially to target here, for example. But it's not worth it. It's too much. 29 points. Okay, this is 15-minute inversion or 5 minute. That's a 5-minute inversion. Yeah. Yeah, you always put it a little bit less. Always do not put it exactly at the swing. A little bit less. It can create an equal highs, and especially it can create an SMT also. But yeah, I don't like that because it's just an order block. But when you see a displacement, it's really a good sign. But I'm not sure if we're done going lower. If this price at least touched this new day opening gap, I would go, but it didn't. Okay, so this is a fair value gap in the 5 minute. Apparently, it touched it barely. Okay. There is a 5 minute inversion, but in this case, I won't be entering unless I see a breaker here with a. Nothing that's interesting yet, but if the body closes below the swing, things will definitely change. Now I'm looking for the best stop loss to put. I don't want to just go and put my stop loss on top of a swing high randomly. I want a precise stop loss and a very precise TP. I want to know what I'm doing and I want to understand it. So this is a nice opportunity to go short. This is really nice. If this, for example, gets broken, I will put my stop loss here and above this breaker, or at least I will put it here. This would be nice, and absolutely I will target the next liquidity. Even if this candle closes with the body, I can go here. This will act as a bearish order block, but the body needs to close below. At least this one. I cannot wait for the other one. Nice displacement. That would be perfect. I would have a good stop loss with a nice TP. That's 43 points TP. That's almost $900. But look, yeah. You really don't want to enter when you're not confident or the price is not delivering nicely. Just don't do that. And that color, that's a fair value gap. I'm assuming it's an inversion, so let's see if it's respected. Now it's respecting it. Now it's absolutely respecting it. Okay, so this is the new candle. Okay, it's fine. I still fine. The inversion is being respected here. We touched the 5-minute fair value gap. I'm aiming for these equal lows right here. Come on, close below. So it's gonna be tricky either here, or I'm gonna be greedy and put it here if it closes below. Don't run without me. Okay, that there it's very fair. But of course, if it runs and take this, of course I'll be out. But this is a nice bias. I mean, ideally, I will put it here. Let's see if it creates a fair value gap now. But it fills me in, that would be perfect. I would be happy with this trade no matter what. But let's see how this closes. Nice. Okay, I'm in. So again, why I'm in? Because here you see this liquidity was taken. And this gap is a 5-minute fair value gap. And we have this bias to go low now, because all these inefficiency was violated. So of course I'm gonna aim to go short right now. And I put my stop loss there, respecting this order block. And I'm out. That was so quickly. That was so quick. That was not supposed to happen. I'm still confident it's gonna go low. I'm just still confident it's gonna go low. Here again, I entered without an SMT, but yeah, I was confident it's gonna go low. I'm still I'm still shorting this. Here it's respecting this order block, but I need this to become an inversion at least. Look, yes, yeah, it's I'm in again. I know this is going lower. I know that. So that's we had there. I have an inversion, and I put my stop loss above this order block. So let's see. Let me put those away. Come on, before it takes this, fill me in. Yes, unfortunately. I mean, what else? What else? I put my stop loss here. It stepped me out. I was very confident of the trade. It is obvious at this point. I still believe that's gonna go lower. Let me put my entry here. So I want this to act as a breakaway gap. I want that gap to stay open. And why I'm still persistent on going short, because here I don't have an SMT, so price can continue going lower. Fill me in, fill me in. I mean, what else? What else you want me to do? I even put it under the fair value gap with a tick. Yeah, if this closes below, I will try to use this order block. I will go like this, but I really do not recommend it. like this, 21 points, 25 point. Okay, I'm in here. Let me take this. Okay, so I want this gap to stay to stay to stay empty. I want this to be a breakaway gap. And if that happen, okay, the order is exactly at the order block. Come on, come on, come on, don't do me like this. Don't do me the second time like this. This is just sad to watch. So it's not only it stepped me out with 2 points here. When it ran, it did not fill me in when I put my entry here above this candle. Exactly. It did not fill me in, it went. And now I put the order here and look where it touched and it just... There is a fair value gap there. I want to use it. But I'm glad at least I got the bias right. And I was so confident. I am very confident that it's gonna run down. I'm very confident of that. And here it stepped me out with this shit. Look again. I mean, that's trading. You need to keep it together anyway. And now, yeah. I will be out if it takes that low. Either ES or NQ. Okay, I'm still a little bit interested. Not ES or NQ took this. So my entry there is still valid. And even the candle did not close below the two up close candles. So this is not a valid order block yet. So let's see. Yes. This is a valid entry. But the TP is so low. This is just nothing. But it's gonna respect this volume imbalance. Yeah, this is just sad to watch. Yeah, I will take my entry off. This was a close one, a really close one. I'm proud of it. So first I entered here. It stepped me out with that. I still was very confident even when this created this inversion. I entered here exactly and it did not fill me. And then I entered again here and it did not fill me. I entered in this order block. It did not fill me. I mean, but I like that I was right about the bias. And we're out of the micro. I will come back also later on. Yeah, I will take a look at the lunch micro. I won't expect a lot from the lunch micro, but I will definitely have to check it. Yeah, I'll be back in an hour.